being recorded. We'll put this out on our socials and stuff. So for those of you that don't know, we're here today with Nathan Turner of Earnest Investing, hedge fund manager, local note magician, and market expert in niche market real estate notes, raises private capital as a hedge fund manager, and actually conveniently owned Diversified Mortgage Expo. So DME, I think, is next coming up under 30 days here, I believe.
A little more. We got it's beginning of May, so we got a little bit more time than that. Thank goodness.
But yeah, I'm excited. In other words, saw a couple other logins. Sam, appreciate having you here today. Christian Berry, appreciate having you here today. Timothy Moore, appreciate having you here today. We'll probably get a couple late additions. But again, this is the Mobile Mailbox Money Mastermind, featuring Nathan Turner here today. DME here next month. We'll have a booth as well as possibly being on their panels, still talking to Nathan about how we can be of service. So happy to have you here today, Nathan. We got a message in here. How are you doing, guys? Hopefully everyone's doing well. So Nathan, I'm going to kind of kick it off to you lightly, just to kind of let people know about DME, a little bit of your background, and how you're a magician out here in real estate notes.
I try, but thanks for having me on. This is great. I'm Nathan Turner. I live up in Canada, so that's the other kind of cool thing is everything I do in the note business is from a different country. I don't even live in the United States, but I get to enjoy all the benefits of note investing from afar, and so that's fantastic. I started creating notes in 2009 and started buying non-performers back in 2010. And then it was just last year we put together this fund, and now we're buying performing notes, looking at buying some mobile notes on mobile homes. And so yeah, it's been good. It's been a lot of fun. So and then it was 2 years ago, almost 3 years ago now, we took over the Diversified Mortgage Expo, just for the networking. That was really the whole motivation behind it. Just for myself selfishly, and then to provide a place where people can come and just get together with other known investors, learn something that maybe you didn't know before, make contacts that'll help you just take your business to the next level.
Absolutely. That's the place to be, these different conferences at the end of the day. That's how I've been asked multiple times, how do you raise money in real estate notes? Oh, well, you get together and go to these national events, a beacon of calling individuals, of that stature. Raising capital is different in a fund and as just notes, kind of a pivot, different strategies all within the same asset class. Maybe you could just kind of talk lightly about, the transition of how to kind of raise money just on a single note basis. And then within the fund is a portfolio, right? So you're raising pools of money to take on portfolio, two different strategies. And I think a lot of individuals would love to hear because they may not have funds and want to leverage their relationships. And maybe you could talk about that lightly.
Yeah, for sure. So when I got started, I didn't have a lot of my money. I was coming out of a business that was actually failing. And so that was kind of, I needed something else to do quick. And I didn't have a lot of my own money. So started using money from family and friends. One of my first investors was my brother-in-law. And it was just like on one or two notes at the time. I don't remember, but it was just like on a small basis. And they're small notes at the time. They were buying them for $20,000 with, $50,000 balances, that kind of thing. So they're just little notes, but it was enough to get me started. And so that was kind of the pattern for a long time. I was taking on individual investors. And the trick with that is, because you're dealing with other people's money, is you can't mix money together. And so you got to be very careful about that. So we had separate accounting for every investor. For a while, before our accountant convinced us that we could do this, I actually had a separate bank account for each investor, and that ended up being just a lot of paperwork. So my accountant's like, no, we'll do all the separation on our side. But we were being extremely careful not to mix people's money. And we still kept it very separate, but it just happened to all live in the same place. So that's how we got started, and did that for a long time. And it was up just coming up to like 2019, 2020. It was getting a little bit out of control, to tell you the truth. We had over 20 investors, about 23, 25 investors, something like that. And what that meant was every quarter we're having to separate out a different accounting for each different investor and doing a different report for each different investor. And so we spent hours and hours and hours just preparing everything for these reports that were going out every quarter. So it kind of the catalyst for me looking for a different solution was it was just administratively ridiculous. Like, you were just spending so much time on that. And that's where we started looking at the fund model. And for me, on the selfish side, again, like on my side, it's much easier because I can combine funds. So then instead of issuing 23 different reports, I'm issuing one to 23 different people. Well, that's a totally different story. That's much easier for me to manage. So that was really where that came from. That's where the idea came from. And then we're looking at it and saying, okay, but then you've got investors' money is all mixed together. So that means instead of one investor being attached to three notes, where one of those goes bad and it'll tank the whole portfolio. Versus this way, investors can put their money into the fund and three go bad, and it's not a big deal because that's out of 100, and it doesn't really touch the rest of what's going on. So it made a lot of sense in a lot of different ways, and so that's kind of the ultimate decision was to make the switch. And so we're still winding down. We've got a couple left with these individual investors, but at the same time ramping up the fund.
So let's say that you were to go back a year ago and you had a few notes available, right? And you try to go create that new one-off relationship, or maybe it's another, previous relationship. How do you court that individual? What's kind of your pitch for a single note strategy? Because I know there's a few here today. We have notes, they could leverage that relationship. They could find notes out on the market and leverage that relationship. What would you say kind of to give a lane for an individual that has that relationship but doesn't so much know how to approach that? What does that look like?
So for a very long time, and this is maybe a little bit different because we were dealing with non-performing notes. So on a non-performing note, it was easier to say, okay, we'll get it together. Typically what I would do is the investor would put up the money. I would do all the work. I had all the connections, all that kind of thing. And then we would split profits. And that worked well because either we were taking back a property and we're going to sell it, or it was a non-performer. We've got it reperforming and then I'm going to sell it. But it was always just a transactional relationship where I would buy something and then resell it. And then upon sale, that's where we would split up the profits. And so that worked really well. With a performing note, you can still do that. You can say, okay, you put up the money, I'll go and do the work. I've got the connections, I've got, everything that I need to know to be able to do the business and the time. And so, okay, I will go and buy this performing note, and then we will split up the payments some way, or you take like a management fee or something like that. Management fee, you've got to watch that a little bit. You don't want to be getting over into being considered a servicer if you're not licensed. So there's some things to watch out for, but it's definitely doable.
How do you structure that via documents? Is that through hypothecation? You have some partial models as well. What's your take on that?
Partials is a little bit trickier because, so like for example, in my fund, it's very difficult for me to, almost impossible actually, to buy a partial because with a partial, typically the way that you structure that is I'm going to buy 2 years worth of your 30-year note or 20-year note, whatever it is. At the end of that term, then that note goes back to the seller. The problem is there's no recuperation of the capital. So if I bought a partial note for $10,000 over the next 2 years, I've received payments. That's great. In order to make sure that that $10,000 is repayable, I have to actually take off for each monthly payment. I have to be able to assign some of that to go to pay back that $10,000. So it's very difficult to be able to get that done. So as a rule, I don't buy partials. I just buy whole notes.
Love it. All super valuable information. It's pretty nimble in the offer to an investor, depending on who you're talking to. Uh,
Yes.
it's based on negotiation, your relationship, and things of that nature. We've used the hypothecated model over the past couple years. Why? Because that translates the asset, right? Gives the investor their lien position or pledged master lien via documentation. But that gives them their collateral, right? So that's their
Mhm.
collateralized investment opportunity. And depending on the relationship and negotiation, you can take a portion of the interest or portion of the payment
Mhm.
or is there any other way to structure that? You could sell the first term
You could.
the payments.
Yeah. Yeah. You can do it as a term. Yeah. You can do split payments. You can do, and that split doesn't need to be 50-50. It can be 90-10 if you want it to be. There's all kinds of different flexibility in there.
Nathan, how many notes have you gone through over the years? What's your running balance, running count? Or do you even
That's a good question. We did a kind of an informal. I actually don't know the actual number. I know it's somewhere north of 300, but I couldn't say exactly. But hundreds. And that either that's something that I bought, and like I say, lots and lots and lots of non-performers. So that's where we bought it, and then either worked it through to get the person paying again, then sold the note, took back a property, and then sold it on terms and sold the note. I took back the property and sold the house. There's and anything and everything in between. There's lots of different strategies within that. But yeah, hundreds of times. It's been fun.
you got non-performing, you got re-performing, you got performing.
Yeah.
Those are I think the three, and then kind of partials and stuff like that, kind of outside of that.
Yeah. Yeah.
Uh, but for the person that may be starting their venture here,
Yeah.
how would you encourage twofold? How would you encourage the capital investor that may be weary on the side about investing in notes, and then the new capital raiser who wants to raise money from the aunt that has 50 million bucks or whatever? How would you
Mhm.
answer those two?
All right. So for the person raising the money, the first thing is make sure you've got some education. Make sure you know what you're doing because you're dealing with other people's money. You do not want to be getting yourself into trouble that way. So make sure you know what you're doing. You've got some education, and that doesn't need to, there's no university course for this. You've got to just either find somebody who's willing to teach it to you or teach yourself as you go along. Ideally, you've got a little bit of experience behind you where you've bought and sold some of your own notes and have some experience that way. A major part of it, and I know it sounds like a commercial, is getting out to events and meeting up with people and making sure you've got the right kind of connections for whatever you're going to be dealing with that note. Anything from finding it to having an attorney on the back end in case they don't make payments, having servicers be able to service that note for you. I mean, all kinds of things. Property preservation people that can take care of the house if and when you need it, that kind of thing. There's lots of different things that you're going to need a lot of contacts. So that's for the capital raiser. There's a lot that goes into that. For the person who's putting out the capital, I think enough education so that you understand how it works. And I would say to people, and what I tell people is, look, this is your sleep at night money. Like it's very well secured, especially if you've got a good operator and they know what they're doing. It's very well secured. And for us, like it's a minimum 25% equity spread in there. So in case that there's a downturn in the market, we know we've got at least a 25% cushion. So it's a very safe way to invest. It's a really consistent and very manageable way to do it. So it's really a good play, especially if you're looking at IRA funds. This is a fantastic investment.
You said the sleep at night money. What does that mean to the layman? That sounds like what does that mean to you?
To me, what that means is sometimes you put some money into an investment and in the middle of the night, you're like, oh shoot, what about this? What about that? And what if that doesn't go right? And how is this going to work? Uh, and there can be a lot of value in some more riskier investments where there's a larger payoff expectation. And there's some fantastic investments out there, and you can look at lots of different varieties. With notes, I think it's because it's so well secured and it's such a much more predictable type of income. You can sleep easy at night. That's where you can just put your head down and not have to think about it again. You know, you're going to get paid.
People think that that comes with a 3 to 5% rate of return, and we can't quote rates of return out to people today.
Yeah.
But for someone that may assume that, I'm told they could potentially earn as much as 10 to 14 to 8, depending on what kind of terms they want or
Yeah.
timeline.
Right.
Kind of a misconception. It is a safe, secure, stable bank quality return, but you're
Right.
also kind of earning an above average one. Wow, interesting.
Yes. Yeah. Yeah.
Is
No,
that the goal
absolutely.
at the end of the rainbow?
Exactly. And if you want to get into a 5% CD, great. Last time I checked, 8 or 10 or 12% is higher than a 5. So, and for the same kind of security, or very similar to, personally, I would go for something that pays a little more.
DME coming up here in 40, 50 days, 30 days.
Yeah.
I don't even know what day it is right now, but there's multiple national note investment conferences. Where do you go to learn due diligence items? Where do you go to connect with capital investors? Where do you go to connect with servicers? Where do you go to connect with attorneys or other hedge fund managers? Let's touch on DME here lightly, real quick.
Yeah.
Go ahead. I'll give you the floor.
Yeah. So, like I said, that the whole idea of this was just for the networking. So, partially what that means is you're going to come to the conference and you're never going to have somebody pitch you. You're not going to get something from stage where the person, their whole presentation is working up to some kind of pitch. It's not what we do. It's not allowed. If anybody does that, they're not allowed to come back again. We're very careful about that because that's not what it's about. Do people have stuff to sell there? Of course. Yeah, of course. And if you want to get in private conversations and work out something where you can buy some training or whatever program they're selling, absolutely. But you're not going to hear that from stage because we just want it to be about education. And then on the networking side, we're heavy on that. We've got times set aside where you can get together and get with people who are there and start making deals. People that you haven't met before, or people that maybe you've talked to on the phone, but now you're there in person. So you can shake hands and you can start actually, face-to-face conversation and get into something serious. So we've got like our axe throwing tournament the night before, which is just a ton of fun. And you can come, and it's a very low stress, very easy type of environment where you can start to meet people before the conference even starts. So that you walk in Friday morning, you've already met 10 different people. You can sit down with any one of them and you can start a conversation because you met them last night and had a great time.
How does notes fit into the current economic environment with pricing, real estate, interest rates, mortgage rates? Uh,
Yeah.
what's what's your take on here in first quarter 2025?
Notes is so versatile. It really fits into pretty much any market. Today's market is just as well suited as it was 5 years ago, and just with a different approach. So today's approach, I think, is really a lot of what you guys are doing, a lot of the seller financing and people that are trying to get into homes that maybe don't want to or can't go to a bank. That's perfect. That's exactly what we're there for. So seller financing is a really great play right now, where you can get somebody into a home for not a whole lot more as far as interest rates are concerned than what they would be paying at the bank anyway. But that's a really great play. And then you can turn around and sell those notes or buy those notes, whichever side you happen to be on. And it's fantastic. And then you've got this performing note that you can hang on to or sell at any time. So it's a great, great play today.
I think has somewhat of a negative connotation, creative real estate
Yeah.
out in the market. There's a need for it right now.
Mm.
How would you approach creative solutions, say, with other agents that list properties for sale out on the market to present it favorably? Because it's kind of painted in a negative light at any given
Right.
time. Pace Morby blew everything up with sub two, and now everyone almost doesn't even want to accept offers like that. What's your take on that?
It's interesting because it's a great play. It's a really good way to go. I would say that one thing that we're trying to help those who are doing seller finance, one thing that we're trying to help educate them on is to do it properly. And what I mean by that is you're using I'm a residential registered, I don't know, whatever the R is that you want to choose, but the mortgage loan originator. So somebody who has qualified that borrower, again, is not necessarily to bank standards because that's why they couldn't get that loan at the bank, but it's at a standard that is government approved, that everyone has agreed that yes, this is a qualified buyer and somebody who can continue to make payments over time. That's the whole idea of that RMLO, is to make sure that the borrower has the ability to make payments over time. So if we can help all of our seller finance friends do that and come in with their seller finance strategies, and then also adopt some of the regulations that are out there, that's perfect. That's exactly what we're looking for. So we're not, loan sharking to people. We're not trying to take advantage of anybody. Far from it. We want somebody who's going to be able to make payments over time consistently. So we want them to succeed. So we're trying to qualify them up front to be able to do that. So nobody's trying to take advantage of anybody. We're just trying to provide an opportunity for people who need it.
James, just so you're aware, there's a few people trying to get into the meeting. But yeah, that's how the people that qualify and go with seller finance, what's the common reasons why they're going through a seller finance program? Is it a lack of a tax document? Is it because they're self-employed? What would you have to say about that?
Yeah, all of the above. It can be where, yeah, they don't have the right documentation for a bank. Maybe they're self-employed, and as a self-employed person, I can tell you how much fun that is talking to a bank. They don't know how to deal with me. They don't know what I look like and how to deal with whatever documents I'm bringing to them. They just don't understand it. And so you get a lot of those folks. You get a lot of, especially in the southern states, you get a lot of the ITIN borrowers. So the people that are in the United States legally, but they don't have a social security number. And again, that disqualifies them from bank financing. So they're great payers. Those are some of my favorite borrowers. They're extremely conscious and take very good care of the property. So I'm a big fan of that kind of thing. I've heard of many times where people will go with seller finance because they don't trust banks. And simply because of whatever country they've come from, or even if they grew up here in the United States, they've decided that banks are not above board and they're not exactly what they claim to be. And so therefore they're happy to do the seller finance deal and pay more for it because they just don't trust the banks in the first place.
So there's an institutional play going on right now. It sounds like, with the mass distrust and non-favorability of the banking situation, the need for alternative solutions. Also for the investor, the bank quality return and an alternative real estate strategy.
Okay.
That's really important right now. That one spot in particular, the alternative investment strategy. Why? Because residential real estate has crept up in appreciation so much and rental rates hadn't so much matched that. Where's the return on investment at the end of the day? By the time you're paying maintenance, management fees, insurance, and taxes, you're kind of left out to dry. And we just saw huge appreciation over the last couple of years. Is that going to happen again? That's what you're banking on a
Right.
conventional real estate investment strategy. I don't have a crystal ball so much, but to me, it seems like that has already taken place. We may be at a plateau, right, of pricing. I don't think it's going to fall super, depending on what other people think. But that's just my take, especially with labor and material costs, alone at all-time highs. We saw permits increase, I think, 3 times over the past 3 years,
Yep.
3x. What does that all translate to? There's a need. There's a true
Absolutely.
need for this right now. And not only from the consumer side, but also for people looking for that safe return outside of a CD at the bank, that's paying 3 to 5%. And is that even safe? Anyway, at the end of the day, kind of went on a light rant right there. Uh, I had a
No, but it's true that the banks, I think that plays into it exactly. We saw a lot of banks fail not too long ago, and even just in the last 2 years, the more big banks that you wouldn't think would be in that category, but they're failing as well. So how safe is your money with a bank after all? And are you better just to go with somebody who's private, who at least you can have a face-to-face conversation with? I think that's very valuable. Like when you pick up the phone, if you're the borrower and you've got a question and you've got some kind of an issue, when they pick up the phone and to talk to the lender, they're talking to me. They're not talking to somebody overseas or something like that that may or may not know what they're talking about. Or it's classic. You call into a bank and you get one person, you ask their question, and then you call back an hour later and you get somebody else and you get a completely different answer. And that's not what this is. When we're talking about private sales, when we're talking about private lending, you're talking almost always, you're going to be talking to the principal. And so you're going to be able to get, good answers and good communication there.
I'm having great bounce off here from you, Nathan. So appreciate off you right now. This is one step away from depositing your money in the bank account, right? There's terms with a note, right? So from an investor that doesn't want a 20-year term and they're looking at going to deposit, say, $500,000 in the bank and get a 5% return because they have some liquidity or whatever. What's the nimbleness in term, and why is this adjacent almost to depositing in a bank account?
It's fantastic. It moves so much easier. So like, for example, people that put money into my fund, we don't have a minimum hold time. If you decide you want to take your money out any day, that's fine. I will say that the money is in the notes. So I will probably have to sell a note or two or however much it is to get your money back out. But we're talking like 30, maybe 60 days to be able to have that happen for you. So it's very liquid. It's very easy to access capital. I was actually talking to somebody the other day, and he was telling me how he has two or three, he couldn't even remember. He had 2 or 3 401ks that were with an old employer. And so at some point in the conversation, I said, so did you know that those old employer 401ks, you can convert that to a self-directed IRA? And he had no idea. So we're in the process of helping him do that right now because he's not very happy with the returns he's getting in that 401k. So instead, he's going to be able to convert that over into something that he can self-direct and choose where he wants to put his money and make much more than whatever the bank is offering right now.
I got Romeo barking in the background here. But that tax deferred and tax free investment strategies, I was talking to Mike Del Prete with Azria the other day about most people not knowing that they can self direct their IRA or solo 401k. The 401k gets kind of there's some stipulations if it's with your current employer or not.
Right.
I think that depends on the employer. But if you moved from a company and you still have that, I think it's considered a 401k rollover, they can direct those funds. So
Exactly.
IRAs, solo 401ks, 401k rollover, just have to find a custodian and then obviously a lead base for the private lending. Either people flipping houses or buying notes or things like that, or in a fund. Did you know that you could invest tax deferred in a fund? You know what? And
By the way, we have a directed IRA. They're going to be at Diversified Mortgage Expo. So if you've got questions about that, or if you have one of these old accounts, they're there to answer your questions and they can help you get started right away on that. So just saying, one-stop shop.
it is. It really is. I've picked up multiple investors from DME, Nate. So I'll give you your flowers for that, for sure. We've seen, other education platforms out there like the Node Investor University. Who else? There's the nodeinvestor.com, I think it is. I've seen over there once or twice. If someone wanted
They've been out there. Yeah.
education,
Tracy and gosh, like really anything you need in the note business, this is where you find it. And it's such a good place to come together. So like, for example, even down to, we're in final talks here, but we've got another company that's coming out that does property valuations. So, like I say, I'm up in Canada. Everything all the notes that I buy are in the United States. So I'm looking for people in the United States that can help me figure out whatever I need to figure out, including people that I can call before I buy the note. They can go buy the property, take pictures of it, a local agent that can tell me what they think the house is worth versus what I'm seeing on Google from my home office. It's absolutely incredibly valuable. Like I couldn't do it without it. So there's anything and everything you need. That's the place to be.
Kind of case unique to be a Canadian investing in the U.S.
Yeah.
Uh, um, what what kind of quick quips do you have about that in general? Maybe for the individual that'll watch this recording, or someone's trying to raise money from Canadians.
Yeah.
What's that climate look like right now?
So it's good. I'll tell you that. So there's a couple things. When my kids were little, somebody asked them what their dad did, and they said, I don't know, he just looks at a computer all day. That's pretty much what I do. And they're not wrong. That I, everything that you need these days can be done online, and or over the phone. So the only time I travel to the US is to go to a conference, whether it's my conference or we were both at Noteworthy just a couple weeks ago. Um, different conferences around. Again, going to different conferences. I've been doing this 15 years and I still go to every note conference I can because I learn something new every time. But it's people say invest in your own backyard, and so I do. I just have a really big backyard, and that's fine. And it doesn't have to be drivable distance. It can be if you want, but it doesn't need to be. Uh, I have never so I have been to, out of the hundreds of notes that I've purchased, I've been to one of the properties, one, just because it was near to Niagara Falls. We happened to be there as a family, and I said, "Hey, we've got this note over here in Tonawanda, New York. It happens to be, half an hour away. Do you guys want to go see it?" Sure. And so we just went on a whim. I didn't need to be there. I didn't have to be there, but I just thought it would be interesting more than anything else. But otherwise, you don't need to be present. You don't need to have to lay eyes on it yourself. You can have other people do that for you.
So, for people wanting to create a lifestyle investment strategy, making money from the phone, there's some element of monitoring payments and stuff like that. Uh, but wow, what safety that provides and the nimbleness to be able to go travel, do what you want, or maybe you have a 9 to 5, or you run a major company and you don't want to deal, with Airbnb check-ins and check-outs and things of that nature. You don't even have to visit the property here, it sounds like.
No, no, you don't need to. And like I say, if you want to, you can. You don't have to though. So don't feel like you'd have to, don't feel like you need to be in an area where notes are really good, or, where notes are popular or anything like that. It doesn't matter. I buy notes in Arizona. I buy notes in Florida. I buy notes in Texas. I buy notes in North Carolina. It doesn't matter. All over the place.
What other events are you planning on attending for anyone that may be watching that are worthy of conversation this year? Maybe not so much note centric or just in general.
Just in general. So I go to a bunch of different ones. There are different IMN conferences that are loosely attached to notes. There's one coming up in June in California about non QM, so they're non-qualified mortgages. I've been going to that the last couple of years, and again, just to make connections if people are looking to sell some of their notes. I want to be the guy they think of to be that resource. And gosh, I'm pretty boring. It's mostly note centric type conferences. That's usually what I'm attending. Um, our alternative investment summit from Directed IRA. That's a good one. Again, just a group of people that have IRAs that are looking for something to invest in. And I'd like to be, again, the person they think of when they're thinking of where they could put their money.
I think Directed has their Austin SDIRA summit. Is that in Austin or Houston? I can't remember off the top of my head, but that's coming up.
I don't remember, but yeah.
But yeah, IRA, that's those IRA conferences, additionally note conferences, alternative investment conferences, great places to go if you have capital set aside or you're wanting to delve in, and raise private money, go into these events and rubbing shoulders with other individuals that are actually operating, doing deals out here to bounce ideas and kind of talk about hypotheticals, like we're doing here today. This is kind of a case unique situation because me and Nathan have built a great relationship over the past, how long has it been, Nathan? Maybe 2 years?
2, 3 years, something like that. Yeah. Yeah.
So yeah, we're moving along. Happy to, catch you at all these different events. You're pretty active out there. Half the time just kind of bump into each other.
Yeah. Well, because it's all about the networking and over the Zoom and all those kinds of things, that those are great. And it's a good way to stay in touch. But I really, on Facebook, I've got, I don't know, 3,000 friends. But how many am I actually connected with? And the real connections come when you're in person with somebody and you're talking to them face to face. And you go out for dinner, you go out and swing a club and hit some golf balls and those kinds of things that we did last time. But that makes a big difference. Just having some time together, quality time.
Uh, So I forgot what I was about to say. I had it right on the tip of my tongue. Oh, the plan of action for someone that's wanting to raise money. I talked to a lot of other new hedge fund managers, and things like that. What are some tactics, maybe almost plan of action points you would tell someone to go do here in the next week? Is that an online presence? Is that mailers? Is that obviously we talk about conferences pretty heavy, so maybe we'll leave that one off.
Yeah, sure.
But what's your take on that?
Yeah, I mean, you definitely want to get your name out there, and I mean, start with who you know. That's going to be one of your best resources. Um, I actually had a company last year where they did a whole campaign where they were reaching out just to my LinkedIn connections, and pitching people and just kind of touching base with them and seeing where they're at and see if anybody's looking for opportunities to invest. That's a great place to start.
Through messaging?
Yeah.
Okay.
Yeah. So that's a great place to start. Then the other half of that is making sure that you're set up correctly. So making sure that you've got, depending on what exactly you're trying to do. Are you looking for just a joint venture partner, or are you looking to do a fund? Or if you're looking to do a fund, what kind of fund? Like there are different things you got to be aware of. And so again, get with the experts that can help you out with that. Because again, when you're dealing with somebody else's money, you got to be very careful, and there are laws around that. So they're also a DME where you can meet up. I use crowdfunding lawyers. Is that who you guys use?
So we used Avestor.
Okay.
So Avestor is an online portal. They have the attorneys draft the PPMs and make sure it's all compliant.
Yeah.
And then actually set up an online portal. They have a continuous option and then I think the raise for the delta and then close and things like that.
Yeah.
Currently set up as an accredited 506C, which comes with its small bag of tricks, but it provides us the availability to publicly market our opportunities with a rate of return to strictly, obviously, accredited investors. Liked the crowdfunding, and I'm trying to figure out possibly how to run something in tandem, without having to pay another $20,000 or whatever. That may have to be the case. Long term, I think that's great because conventionally note investors historically are not so much accredited. A lot of the avatar note investors, when you get up to the accreditation, it's a lot of like syndicated investment dollars and multifamily and storage units and stuff.
Yeah, and that's where and you're totally right. And it's a different kind of person when you're talking about the accredited investor. So there is room for that where I've been toying with that as well. Is we've got our 506C for accredited investors, and I was debating whether or not to set up a 506B, which can take a portion of non-accredited. And so I don't know. We still haven't figured that out exactly how we want to run that, but it's a possibility. But again, get with the experts. They can help walk you through that and decide which way you want to go and why.
The B, I think it was it 25 non-accredited investors?
something like that, 25, 30, something like that.
That's a good amount. I mean,
Yeah.
are you able to publicly market the bee? I don't.
No,
Yeah.
that's the catch.
Really?
Yeah. You can't publicly market it. So, possibly if I'm talking to somebody and they say, well, they really like the idea and yes, they'd like to invest, but they're not accredited. Once we have a relationship, then I can say, well, you know what, actually, I do have this other 506B that may be something that could be more of a fit for you. So I don't know. Like I say, we haven't totally settled on that yet, but we'll see.
Yeah, we're in the same boat. Maybe some collaboration there. You
Yeah.
never know.
Yeah. Yeah.
So, happy to explore opportunities with you today, Nathan. We're at a 12:42 here in Scottsdale, Arizona. Nathan, are you in Canada right now?
I am. I am. I'm just outside of Calgary, Alberta, and we are looking at a little bit of snow this afternoon. So I'm looking forward to going to the ski hill on Saturday.
I'm jealous of that for sure. I haven't had the chance to get out in the snow this year. Uh, I'm gonna take a page out of your book, Nathan. So, what do you
Yeah.
see here going on with the market in 2025?
I see. It's going to be really interesting. So I know I come back to it, but we've got somebody from Mortgage Bankers Association that's going to be there, and they'll give us their predictions. We've got a lady named Melody Wright, and if you don't know who she is already, she's definitely worth following on all the socials and on YouTube and things. She used to work for all the big banks, all those ones that went bankrupt back in 2008, and so she's got a very unique perspective on that. Her take is we're going to see a bigger downturn than maybe is being represented otherwise, and so that'll be interesting to hear from her. And again, I think it's going to be somewhere in the middle of that. I'm not sure it's going to be so bad, but I have no idea. But I do see that we're looking at some kind of a downturn, where at the very least we're going to see some drops in property values. I think there are going to be some defaults out there. I think just with inflation, it's getting really hard for people just to afford anything, and so more business for you guys. So that's great, but I think that's where we're heading. I think we're going to see some people that are going to be really hurting, and so that sets us up to be in a position where we can help a lot of people and help them stay in their homes where banks may not be able to be the same kind of help.
Yeah, you kind of see that in credit card balances,
Yep.
auto delinquency here and there,
Mhm.
just some kind of indicators to watch out in the market. Anyone have some last questions here for Nathan Turner here? Invaluable information today.
Hey, Nate, got a couple quick questions.
Sure.
Do you look or do you have an affinity towards certain states like blue states or red states or relative to eviction rules or eviction laws? What's your take on that?
I'm fairly colorblind, but I do look at it's more like judicial, non-judicial. So in my experience, New England is a terrible place to buy a note because the foreclosure laws there. And again, if you need to go to a foreclosure, and hopefully you never do, especially in those states, because if you do need to go to a foreclosure, it's a very long and expensive process. And so and when I say long, I mean, 2 years minimum, 2, 3 years just to get a foreclosure done. And then you've got to deal with an eviction on top of that, possibly. And so it's just a very, very long process, and so I tend to stay away from that. Other than that, I'm pretty flexible. I like Texas. I like Arizona. I don't see a lot in Arizona, but I like Arizona. Um, Pretty much anywhere. It's just that New England area that has really got me scared off.
We noticed that, or I've noticed that from experience, even in the New York, uh, still close to that New England area. That
Yeah.
again,
I include New York in there.
yeah, include New York in that because it's the same answer. It's actually a couple years. So they're very pro occupant situation and they could draw it out, which really crushes any type of prospective return. We get pitched mobile home parks and RV parks all the time at very great, look like really great numbers in those markets. And that's the challenge. I always look at the downside and say, well, if something goes wrong, we're going to have an occupied person in there for a lot longer than what we're thinking.
Right.
And our legal expenses could completely go crazy. Arizona happens to be a trustee deed state for single family homes. So even at that, it's 3 months they could be behind on their loan, and then they have a 3 month cure period for that 6 months. It could be 7 months on single family homes. Manufactured homes and parks on leased land, what we do, it's like a 45-day turnaround from being behind to actually fully taking ownership of the property is about 45 days. So it's really, really short, but that's kind of unique. We deal in the low cost housing space of primarily manufactured homes and parks. So it's under a different scope of personal property in comparison to affixed to land.
Right. Okay.
Considered a repossession,
Right.
opposed to a foreclosure. So definitely important to identify, because that's a question people ask at any given time. That's your risk, right? Investing in notes. There's a risk in investment strategies. What's the risk in note investments? It's to go non-performing, and exactly what we're talking about here today, to have to go through a foreclosure, eviction, retitle and things of that nature. So, there is recourse at the end of the day.
Right. Yeah, that's perfect. Yeah, and then I look at a lot of contracts for deed, and it doesn't work exactly in every state, but it's the same kind of an idea. It's a forfeiture instead of a foreclosure, so it's a much faster, much easier process. But again, it's state specific, and so it doesn't work everywhere. So you just gotta know.
If someone was looking to get in contact with you today, how would they do that? Would they wave the bat signal in the air? Would they call you direct? How would they reach out to you?
Probably the best way would be go through the website, earnestinvesting.com. And then you've got a little bit more information about notes and what we're doing. There's a link there to the Diversified Mortgage Expo. And then there's that contact page. And then you can set an appointment right there, and we'll get on a call and I can answer whatever question you've got. Hopefully.
You answer your phone, in other words.
I do. Yeah.
Well, hey, appreciate having everyone here today. That's the Mobile Mailbox Money Mastermind here. I encourage you to attend DME. We'll be out there as well. Would love to see some familiar faces, and I'll personally introduce you to the magician, Nate Turner. So appreciate having you here today, everybody. I'll let you go.
Awesome. Thank you.
Bye.